All right, here we go, everybody. It's me, Smart Silver Stacker. Welcome to your weekend gold and silver update. Today, we're going to be talking about the demand for the metals, where it's coming from, why it is surging. In fact, why gold's global demand just hit a record high in the second quarter of 2024. So we'll also take a look at silver, the silver chart, why it's possible here. We look at the silver chart that a bottom may have been put in the price of silver. But let's start with gold today. And let's delve right into this data from the World Gold Council titled Gold Demand Trends Q2 2024. So they say gold demand firm, record prices prevail. And that's important to note that we're seeing the demand for gold surging to record highs, despite the fact that the average price remains at a record high as well throughout the second quarter this year. So total gold demand reached its highest Q2 on record. You can see this is Q2 24, and there's across all of these sectors just a huge amount of demand. Now you can see purchases here on 2012, I think this is 2013, did actually exceed what we're seeing this year, but net sales also contributed to a lower level of demand in that year. So this year, actually, Q2, the highest one on record. Now, it's very interesting when you delve into this data from the World Gold Council. They kind of tell you what's going on, where the demand is coming from. And this is very fascinating because, in fact, gold and silver stackers like me and like many of you watching, the demand is actually not coming from there. In fact, the interest in bars and coins made of gold is on the decline, down 38% year over year. So where is all this demand coming from? Well, interestingly, the demand from technology is on the rise, up over 11% year over year. Now, oftentimes we think about silver as an industrial metal, but the same can be said for gold. Now, you know, if they're using gold in technology, that there probably is no substitute because gold is a very expensive material to work with, but it does have some unique characteristics, just like silver does, that make it very valuable as a industrial metal. It's very conductive, it's very reflective, but notably, it's also incredibly stable. Gold has a full outer electron shell, if I understand the chemistry correctly, that makes it very stable, makes it very resistant to oxidation and other chemical changes. Basically, gold just wants to stay gold. And as a result, there are applications where it's really indispensable when you combine it with all of its other properties. So we're seeing the demand for industrial gold actually rising significantly. And that has a lot to do also with the AI and the tech boom, right? A lot of this stuff, you need either silver or gold or whatever to build these chips, to build these systems, and there are really no viable substitutes. So they're going to get their gold even if they have to buy it at record high prices. Central banks also, I mean, they're a big buyer. The demand from central banks up over 6% year over year. Now, that's interesting when you consider all the hubbub about China's PBOC, the central bank there in China, halting their official gold purchases. So they officially halted that back, I believe it was in April. And when that first announcement hit the gold market, that news hit, you actually saw the gold price sell off. But since that time, it's recovered. Doesn't seem to be a big deal that China has been sitting out official gold purchases for the past 3 months, all throughout Q2. But, you know, it's interesting. This is a story here from Bloomberg. It says some analysts believe central bank buying will remain a key driver for bullion, saying the PBOC is likely to resume the purchases as it seeks to diversify reserves and guard against weak currency. Now, they say that one of the reasons they may have halted these purchases is because of gold's record high prices. They're not getting a good deal on their gold. So in a way, I think this kind of puts a floor under the price of gold, in that if the price falls sufficiently, the People's Bank of China, which was the biggest buyer of gold worldwide last year, is going to get back into these markets and, you know, if not bid it all the way back up, at least put a form of floor under it, because you know that they're looking for deals. And also, there are those in the bullion community that say the PBOC is actually still buying gold, just not through official channels. Maybe they're trying to be a little stealthy about it. That could make sense, considering that one of the reasons they want to diversify out of dollars is because of the looming trade war and the potential for sanctions, which the Biden administration has announced, wave after wave of sanctions. I believe now they're working on sanctioning Chinese banks. So they want to get out of dollars. They want to get into a non-counterparty risk asset like gold. And you might not want to advertise that if you're doing it. So do me a favor, if you're watching, first smash that like button if you're enjoying the video so far. Got a lot more to cover, but also, what do you think? Do you think that the PBOC, Chinese Central Bank, is still buying gold under the table? If you do, put a 2 in the chat. Put a 3 if you think that they've actually paused. I'd be interested to get your thoughts on this. Now, speaking of gold, if you want to get some gold, even though, stackers aren't stacking right now, that's actually a good thing. You can head over to sdbullion.com and click on their deals tab. They've got all sorts of deals on gold and silver bullion right now. Premiums have come down on a lot of this stuff because of the fact that the demand isn't coming from retail investors right now. So that means that, industrial refiners, chip makers, central banks, they're not buying these coins and bars that you and I buy. They buy, big kilo bars or greater. With silver, they're buying 1,000-ounce COMEX bars. So this stuff really is kind of on sale right now, despite the fact that spot prices are up. One good example of that is this pre-1933 gold, which has very low premiums attached to it compared to history. And also, you can just grab, regular old bullion coins. You can see this is a 2024 1-ounce bullion coin. It's $60 over spot, which on a percentage basis with gold at 24.41 is a pretty good deal. And I think that the fact that retail investors haven't gotten into this market in a big way thus far, it's, the central banks, the fabricators that are buying this stuff up. When stackers do get back into this market, it shows you could be a lot of pent-up demand among stackers and among the general public once they realize what's in store for the dollar moving forward. But let's move on to silver here. So it's a different story in silver than in gold. The demand for silver is up. We'll talk about that in just a moment. But the price is not really matching what we're seeing in gold, right? Gold is sitting near record all-time highs. Silver at 27.50 is just a little bit over half of its record all-time high, even just the high from 2011 when it hit $50. We're at almost half that level. So silver's gotten kind of beat up over the past week or so with the broad market correction. We saw silver kind of take a big hit. It's normal for silver to be more volatile than gold, but that also can kind of inform us from a technical standpoint, perhaps where the silver market is headed from here. Now, to be fair, calling a bottom, it's not something you want to try to really stake a large trade on or anything. I don't necessarily have a huge amount of confidence in technical analysis to call tops and bottoms, but there are some interesting things on the chart here which maybe indicate that the odds are silver could rally from here. First of all, is this level, it's right around 26.50 or so. This is a level that you can see served as resistance for a long time, for the past 2 years or so, dating back to 2022, a little over 2 years. And multiple times, silver price was rejected from that level. Now, we broke through that in April. It retested it here, bounced strongly. Now we've come all the way back down to that level. And what did silver just do? Well, when the silver price came very close to this support line, it had a nice bounce. Now, Friday was sort of an ambiguous day. It didn't do much, but silver on Thursday did have a nice green candlestick there, a bullish engulfing candlestick of the previous day. So that could be a bullish factor on the silver chart. But maybe even more interesting is this chart down here. This is the gold to silver ratio along with the price of silver. And like I said, when markets are falling, it's normal for silver to fall more than gold. It's more volatile. It's a much smaller market. It doesn't have quite the safe haven perception that gold does, and probably rightly so. I mean, silver's a more speculative asset, but that also means that it moves higher faster when the metals are on a run, typically. And you see that here reflected in the gold to silver ratio. The peaks in the gold to silver ratio tend to correspond to troughs in the silver chart. You can see here's a peak, here's a trough, here's a peak, here's a trough, And we're at another peak right now. Now, why I call this a peak is going back once again to 2022. You can see that there's downward sloping trend line, which the gold to silver ratio has touched twice thus far. And along with that, it also just kind of bounced off of that when it touched that level, just when silver was bouncing off a level of key resistance. Now, I know a lot of people will say, oh, the markets are manipulated. You can't use technical analysis here. I think that it's still valid. Personally, I think there's some value to be gained from looking at this. Do you want to go all in on silver because of this chart? No. But this is something to consider, right? Something to perhaps add into your repertoire of analysis. Now, let's talk about one of the problems with the silver market right now, and something that I think corresponded with the decline that we saw. So recently, you see this story is from July 16th. There's been some concern over overcapacity in the Chinese solar market. Now, solar and silver go hand in hand. You need a lot of solar, you need a lot of silver to make solar panels. And in fact, that number is actually rising with new generations of solar panels that are coming out that are more efficient, but they actually require more silver. So for a long time, they were getting much better at reducing the amount of silver, but there are some new technologies. The University of New South Wales has done some research on this about the amount of silver that these things consume. You can check that out in previous videos. But the point is that when there's concern that China's solar market is at overcapacity, meaning they're making too many of these things, that means they might have to scale down production. That could be negative for silver. And I think this is part of why we saw the silver sell-off the way we did over the past couple weeks. Someone in the chat here says Reuters is a propaganda rag. Well, look, most media outlets are, but that doesn't mean that we can't glean some information from them, right? So this story is about a Chinese solar giant called Longi Green Energy Technology, and it's about their oversupply. They are blaming a reversal in their financial fortunes on a supply-demand mismatch that has driven down prices of panel components, including solar cells. And you can see here from this chart that this is China's production capacity last year. This is global demand. So if the supply greatly exceeds demand, you're going to see the price of this stuff come down. They might need to make less of this, but here's the thing. There's still a lot of room in this world of green initiatives, carbon, zero carbon, alternative energies being subsidized by the government. In fact, I suspect that that's why China's solar industry was able to get to such overcapacity anyway, was because of the distortions from subsidies and policies which, prefer solar and alternative technologies over conventional energy supplies, petroleum-based and otherwise. But they're still making a lot of solar plants. This is a story from the Cool Down, posted today actually, about China building a massive solar farm, multi-billion-dollar solar farm, and it's going to be the biggest on the planet when it's completed. It's part of an $11 billion project that will consist of clean energy installations. And they say here, to put it in perspective, just how massive the output of this 8 gigawatt facility will be. It will be more than half the current solar output in the United Kingdom and capable of providing electricity to around 6 million homes. So they are still installing a huge amount of solar capacity in China and around the world. In fact, last year, and again, this might be part of the overcapacity thing, but China installed more solar capacity last year than the U.S. has installed in history. In its entire history, in 2023, China installed more silver. So it shows you there is a possibility for massive expansion of this technology, and that's going to be very supportive of the silver price. It's going to lead to a lot of silver demand. And also, it's not just in China. I mean, maybe you don't like solar energy. I mean, I think solar has its role, right? It's really good for off-grid, etc. I don't know if it needs to be the primary component of our energy production. I think probably we'd be better off if the free market decided that. But the fact is, we live in a country where the government is instituting policy to create a lot of solar. This is a story from ABC News. The U.S. government will loan $1.45 billion to help a South Korean firm build a solar plant in Georgia. So this is going to be a manufacturing facility making solar panels here domestically. And, it might not make sense economically. Maybe there's global oversupply. But you got to understand this policy isn't entirely about, sound economics, right? That's why you need a $1.45 billion government loan. And this is all part of the Inflation Reduction Act. So the loan from the U.S. Department of Energy announced on Thursday it's going to be key to funding a $2.2 billion complex that this company Q-Cells is building. It's the Inflation Reduction Act, which offers an extra tax credit on American-made solar equipment, and it lets manufacturers earn incentives for every unit of polysilicon they refine and every wafer, cell, and module that they make. Now, this isn't, again, about sound economic policy necessarily. It's one about, reducing carbon footprint, but also it's about onshoring production of some of this technology. The U.S., we're experiencing deglobalization. We're probably about to experience a trade war with China. Certainly, if Trump is entering the White House, trade war with China is probably going to be around the corner. So I don't think the election is necessarily going to change this. Both parties want to reshore manufacturing here. So you're going to see a lot of resources pumped into the production of these materials. It's going to need a lot of silver. And also, if you think about it, either way, you get a trade war if Trump is in office in November. If Kamala Harris wins the election, which, it's starting to look like that's a real possibility, that's going to mean more things like the Inflation Reduction Act, more of these policies that are geared towards solar specifically as one of the most cost-effective alternatives to conventional petroleum and coal-based energy production. So you can expect a lot more silver to be consumed, and you can see that in the numbers here from the Silver Institute. Their silver supply and demand numbers, which for 2024, obviously it's a forecast. We're not through the year yet, but you look at how much silver is forecast to be consumed, 710 million ounces by industry. Keep in mind, total global production is just over 1 billion ounces. And also, that demand is rising drastically, the level of industrial. A lot of it is from photovoltaics. In 2015, there were 59 million ounces that went towards photovoltaics. This year, it's 232 million is the forecast. And at that time in 2015, the total industrial demand, 457 million ounces. Again, right now, 710. And that is leading to a major deficit in the silver market, which, again, this is one of those things that when stackers and investors get back into this market, this is going to become even more drastic. So if you go back to, first of all, let's look at the deficit numbers. So the market balance this year, if you add everything up, it's negative 215 million ounces. That's the silver deficit. That's the amount that is being consumed, or demand is exceeding production. So the demand for silver is exceeding the supply right now, and it has been doing that for years, but on an increasingly significant basis. Now, if you go back to 2022, you can see that actually the deficit was bigger. It was negative 263 million ounces, but look at what the investment levels were back then. Investment was 337 million ounces. This year, it's only 212. So investment demand for silver is actually on the decline. But it's more than made up for by the industrial demand. So much so that we have the second largest deficit this year in the past 20 years. And obviously, that's not sustainable. There's always a lot of talk of, silver shortages. We're not in a situation of shortage in silver. you can go buy it. The premiums are low, especially on the retail stuff right now. But the inevitable outcome of running, year-on-year deficits to the tune of hundreds of millions of ounces is that eventually there will be a shortage, unless, of course, production is increased. What do you need to increase production? Well, you need higher prices. That is what will incentivize miners to actually produce more of the stuff. So I think that given the supply and demand dynamics in silver, the long-term prospects are very good. Of course, when you look at the subsidized loans and stuff for solar, you got to realize that, of course, the Department of Energy doesn't have billions of dollars to be spending on this stuff, so it's all just being borrowed anyway. So really, a lot of these plans are bullish for silver in multiple ways. One is that they're running up an insurmountable level of debt. And also, they're using that money, at least in part, to buy silver for industrial purposes. So, I mean, this is all very, very bullish for silver in the long term. But, silver's not an investment. It's not an asset really for the faint of heart. It can have these big, wild swings. It's sort of a characteristic of the market. But that's why when it all boils down to it, maybe we get a short squeeze in silver, maybe we get a shortage, I don't know, but there's a lot of potential for it to move significantly higher. One thing's for sure, it's very cheap right now. As we say, gold sitting near all-time record highs, silver at half or around half of its all-time record high. If you go back to 1980, when silver was $50, if you adjust that for inflation, you're talking like, more than $200 an ounce. So we're way below that. And the gold to silver ratio here around 89 right now is definitely at the high end. If you zoom this out, aside from this spike in 2020, when we went up to 125 or so, I guess at the very peak when silver plummeted, in this kind of pandemic panic, 90 is sort of like the high end of the range, right? Like here you get a peak in 2016 of 83. Here you get a peak in 2019 of around just over 90. Another peak around 95, 92. Right now we're just under 90, and we've hit a key resistance level in this. So I think that's actually very bullish for both gold and silver. But silver more so, right? Because the reason that the gold to silver ratio drops in a bull market is because silver outperforms gold. So that's it for today's live stream, everybody. Let me know what you think about the gold and silver supply and demand situation. What type of effect do you think that this will have on the prices? Oh, I got a question in the chat. Hey, Smart Silver Stacker, do you own any cryptocurrency such as XRP, XLM, and etc.? Yes, I do own some cryptocurrency. I'm kind of a Bitcoin maximalist when it comes to crypto. I view most of the altcoins sort of as just like gambling, although, hey, it could pay off, right? It's probably better than buying a lottery ticket. But yeah, I do own some crypto. I'm not an anti-crypto person. I think that it's maybe a little more speculative even than silver, but who knows? I mean, the way I look at it is if you have a small allocation to Bitcoin, it could go to zero, which is a real possibility. Nobody knows. It's only been around for, a little over a decade. So it doesn't have the history that gold and silver do. But if it turns out to be what, its proponents tout it to be as the, greatest thing since sliced bread when it comes to money, I mean, what are you going to do? You're going to fit all of the world's wealth into 21 million Bitcoin? I mean, the price would have to be amazingly higher. So I don't know. Yeah, in terms of crypto utility, I don't know. I mean, I don't see a lot of utility for cryptocurrency in terms of real world uses at this point. I don't use it regularly, but who knows, right? Maybe they'll come up with something. Or despite the fact that it doesn't have utility, I mean, you just look at the price, right? It's performed well, and it doesn't quite behave like a bubble the way that, I thought it initially might have been. When I first saw the first big spike in Bitcoin, I thought, okay, what is this tulip mania? But it's gone up, multiple times in these waves, so it's very volatile. But, tulips never reappreciated after their initial bubble, right? They went up and spiked up in value, and then that was it. No one wanted tulips anymore, but that's not the case with Bitcoin. So, look, I think it's one of these things like, do you want to be right or do you want to be rich? You can say, I don't like Bitcoin, but you don't like Bitcoin, and then it, goes up to $1 million a coin or whatever. You still would have been better off having some. So, yeah, I view it as speculative, but I do own some anyway. Long story short, yeah, Bitcoin is up 6 million % since 2009. But, most of the people who like to cite that statistic didn't buy in 2009, so that's also something to consider. But anyway, that's it for today's live stream, everybody. Thanks for the questions at the end. They're always fun. I do more Bitcoin content, but it never seems to perform well. So I just don't cover it too much. But anyway, let me know what you think in the comments down below. Stay safe and happy.